Hello, right, folks. Welcome to the new video of our series, CRT plus turtle soup. Okay, we have already discussed what is turtle soup and what is CRT and types of TBS. Okay, and we already have what is key levels. Okay, and what is the importance of key levels and which key levels are most profitable key levels for the CRT and what is the importance of key levels in CRT. Okay, so first of all, I will tell you about what is key levels. Okay, what is key levels? Key levels are basically those areas from which we can expect a sharp selling buy. Sorry for the spelling mistake, but okay. Those areas from which we can expect a sharp selling and sharp buying. Now, what's mean by that? It's simply the PDRS, okay, which we mark for the higher time frame, the candle length theory CIT. For example, we have FEG here, okay, and market comes up. Candle close here, candle range high, candle range low, market tap intuitive close here. So third candle is 90 to 95% chances that it will distribute to the downside to candle range low. So this is just a key levels. So you all know about the key levels. So now let me tell you about uh, how which key levels are the most profitable and which you can take. I will give you only four key levels, okay? Four, or which first one is uh, $1 million FEG, okay? And the second one is order uh, low, and the third one is and fourth one is the one of the most my favorite key levels. But for a beginners, it is very hard to find out the value. Okay, what is that? That all low, swing low. Okay. Uh, Fourth one is all high, swing high. Okay. So the first two key levels are also profitable, and the three and fourth is one of the most my favorite key levels. Why? Because in these two key levels, our accuracy is more accurate. But for a beginner, uh, it is very less chances to be get a higher accuracy with these three and fourth key levels. Why? Because they can't mark the valid swing low or valid swing high, and they will mark all the high and low, and they will think that it will be bounce back from here. But this is not the way that you can take these key levels. Okay. Now let me tell you about why is key levels most important in the CRT. For example, so you are playing the three candle CRT, which is like that, okay? And third candle distribute to the downside. Candle range high, candle range low. But on the other hand, if you are or you want to get the higher risk to reward ratio, okay, uh, you also know that the three candle CRT your risk to reward ratio will be lower. But if you want to take the entry on the second candle, okay, and you want the high RRR, okay, high risk to reward ratio. So how will you come to know that we can take the entry from the second candle and it will create the CRT candle? So in this time, these key levels works for us. For example, let me show you in the chart, okay, on the higher time frame chart, okay. My trade is also running in the profit. Let's mark it 50%. gang box to this area. Okay, let me show you. Mm, okay, this is the 50% area. Let me do this, and I will go to break one at this point. You also can see my trade here on the MP5. I took it on the Nasdaq. Okay, don't think that I placed the 13 lots. It's different pair with different contract sizes like M and Q and Q. So it also has the different contract sizes on different brokers. Okay, so now get to the chart back and let me show you why key levels are important in the CRT. Okay, we are back to the chart. Now let me shift to the 4 hour. Okay, goes to the Nasdaq. Okay, the CRT which is played around in the morning. Okay, so here you can see. Okay, it's not a Nasdaq. Okay, actually, yes. You can actually see the order block here. Okay, you actually are seeing the order block here. But when I shift to 1 hour, it is a bit confusing. So when I shift to 1 hour, I got the FEG here. So you can see clearly we have an FEG. Okay, and market is disrespecting the bearish PDRS. You can see all the PDRS are smoked by the market recently. So that's why the bullish PDRs are more profitable to trade at this time. Okay. So I will tell you the logic why I take this CRT in the from the bearish PDRs. Okay. You can see here in the Asia open session, market did what? Candle range low, okay, and candle range high. Now here you will see the importance of the key levels, okay. So let me mark the third candle. If you wait for second candle closure and took the CRT from the second candle, let me show you. For example, if I trade with the nitro strategy, let me also make it clear for you. And both of the trading, I marked it. Let's shift to the 1 minute or 3 minute chart. 3 minute is best for the 1 hour CRT if you're trading the nitro strategy. Okay, so now I will shift to the here. Okay, now for example, if you take the setup on the nitro strategy and, took the 1:2 RR, so it played out, but this range is also very tight and also a low probability. And so this is our start of the third candle, like the third star range of the third candle. So now, if you wait for into the third candle, your risk reward ratio will be poor. Now, some of you people will think that should we take it on the second candle? As I thought earlier that for the beginners, they will get too much losses in this CRT. Okay, you have to master it. Okay, you have to practice it for about months. Okay, 2 3 months or 6 months you can also say to master the entry of this second candle CRT. I also took the entry on the second candle of this CRT which is playing around now. Okay, so if you wait for the third candle open, if you also wait for the retracement to the PDRS, now you can see here clearly we have a breaker block here. You can also take entry from here. So if you target these candle range high from here, your risk to reward ratio will be 2.5. But if I say, if we take the entry from the second candle, you can say we have a clearly candle range low sweep and turtle soup and tap into the key level. Clearly you can see here. Now, market did what? Market create the IFEGs. On the next video, I will tell about the models, entry model. You can use only one or two entry models for your rest of life. to be a profitable. We have a model one entry here. You can clear this way. In the next video, I will tell you what is model one, model two. Okay. There are five entry models, but I will tell you only two because the other three models are just like a shit. They didn't work most of the time. You can see clearly here. Okay. Now, if you take it from the second candle, our risk reward ratio is 4.5. So this is the importance of the key levels. You can say that importance is to gain the higher RR and to gain the higher probability setups and to gain the best setup. You can also say, okay. You can see clearly how it bottom take the uh, candle range, the CRT. So if you take the trade from its candle, which is obviously ICT said that if you have a bigger candle with a bigger body, now then take the entry from the order body of the order block. If you have a thin body candle as the order block and higher wicks, then take the entry from the for whole body entry point. Now you can see clearly we got to 4.5 or 4.7 something RRR on the 1 hour time frame. So this is the power of the key levels, you can say. Here, if I show you the 4 hour chart, uh, which I took to now, this reality, let me show you. You can see clearly. I take the entry on the second candle. Okay, this is our key level. You can see here clearly an order block, and we get the thick as candle here, and now you can see clearly. Now, some of you might will think, some of you not, but all of you will think that this candle closure is bullish. So why I take it? This is what you can call that. This is the power of you can say that experience. If you got experience in this city, you can't imagine how much money you will make with this setup or this strategy. The only thing you need for this is only to master it and practice it. So first, when this is completed, you should must practice it on demo account first. Okay. So this was our video for today about the key levels and uh, importance of key levels. I already made the video on how to mark key levels. Okay. So on the next video, we will talk about the entry models. Okay. Three. I will talk about three entry models and I will merge them with the IFVG. So okay. Take care. Bye bye. See you all in.